Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 9th, 2010. Well, as you can see, folks, the markets are holding fractionally to the upside here after gapping higher on very good jobless claims numbers. I'll cover that in a second. But overall, a very, very positive economic state over the last week. But the markets seem to be getting tired. You have to notice the action today and say it is somewhat significant. You have extremely light volume in the market, but even with that inclusive, the markets are having a lot of trouble staying to the upside. In fact, are starting to dip down just a little bit. Now, you are still positive on the day, and I think that's important to recognize. Whether or not we stay there till the end of the day, we'll discuss in the nightly video tonight in the Research Center. But the Dow right now is up about 8.5 points. The NASDAQ is up 2.5, and the S&P is up about 3.5 on the day. S&P 500 leading the charge, with the NASDAQ and the Dow lagging significantly percentage-wise. Again, just a fractionally higher move on the markets overall. Now, again, jobless claims came out, and you can see the gap up today. It was a powerful gap up. We gapped up into this 111.60 level, which just so happens to be a major resistance level. Now, what I'm going to do here is show you the 60-minute chart. Take a look at this orangish area on the 60-minute chart, and this shows you exactly where we gapped up to and why that was significant resistance. So again, take a look here, folks. I'll zoom out just a little bit more. The gap up occurring right here, and notice how this pivot low is the major level that was resistance. And that's the point we basically halted on a dime, never pushed higher than the gap up this morning, and have reversed, basically coming down almost to the flat line. Now, again, if you look at the 10-minute chart, you can see that gap up right there. The white line is the same as the orange line on the 60-minute chart. We fell down, consolidated right along this blue line, fell down even more, floated back up as volume died out, and then volume started to pick up a little bit this afternoon. It's still overall extremely light, but you did see a little pickup in volume as this market sold off a little to the downside. Notice these candles right down here compared to what we saw on the float, sideways float right here. Note that. And that's where we were going right here alongside. And then as soon as you started to get a little bit of selling, look at the volume down here increase. Downside shot right there, and look at the volume again. And the volume has stayed okay this afternoon. Overall, it's a very, very light day. We haven't even done 100 million on the SPY yet, which is overall light. It's somewhat expected. You have a Jewish holiday today. It's a shortened week because of the Labor Day holiday on Monday. Tomorrow's probably going to be even lighter. Economic news-wise, we had the jobless claims this morning, which, by the way, were a great surprise to the market, coming in at 451,000. Remember, just a couple weeks ago, we had gotten near 500,000, and that was beginning to freak the market out. And it truly is amazing because you see the market reverse on a dime here. I mean, that's really what we're seeing here, folks, because a week ago, 2 weeks ago, the market was in panic mode. Jobless claims were 500,000. Economic data was coming out horrible. And now all of a sudden, things seem all good again. It's almost as if someone took the eraser, hint, hint, to some of these numbers possibly and made them a lot better than they actually were. Now, again, that's for the analysis to be done later on. We'll find out what that is, again, at a future date. But right now, you have to say jobless claims are holding in there. Market, again, is holding in, but it is a bear flag pattern. Please note this pattern right now. After we fell down and basically are just hovering slightly to the positive side, the SPY up 36 cents, you are making an in-spirit of bear flag below the 50 moving average and these two trend lines with the 20 sloping down. See the down candle right here and then the 1, 2, 3 inside bars? You have a little bit of a tail there telling you the light volume is still in play. When you get tails like this to the downside, what it's telling you is the market is trying to break down, but the volume is just too light over here to really force it down. Remember, light volume generally gives you a neutral to upside bias for the trading day or the trading period you're in. All right, so again, you do have an in-spirit of bear flag here. Whether or not it plays out, we'll see towards the end of the day. Right now, based on the moving averages being above as well, you could say there's a possibility of that for sure. All right, again, that's the intraday. I want to touch on a couple other stocks that I think are important so we can focus in on them, and we'll go through a few other things. All right, first of all, Goldman Sachs. One of the main reasons the market is holding up today is because of the financials. Financials have been a powerhouse lately, and you can see Goldman Sachs opened on the highs again, and it did sell off a little bit, but still holding up $1.60 on the day. By the way, nice bear flag here as well. This is a beautiful bear flag on Goldman Sachs intraday chart. All right, so again, that's one of the reasons why the market's holding up. It's also one of the reasons why the market came down just a tiny bit. In addition, JP Morgan. This is a very, very powerful secondary move on JP Morgan. JP Morgan closed here yesterday, and as you can see, it's hovering well up today, although it is off the highs as well because the market has come off the highs. Okay, so again, JP Morgan financials overall, Goldman Sachs helping keep this market positive. Wells Fargo's up 36 cents. Bank of America's up about 14 cents, although Bank of America, you can see among the weaker stocks here, having a bigger drop. Now let's take a look at Exxon. Exxon is only up 25 cents. Notice where Exxon's hovering intraday, right on that 200 moving average. That is support, but the fact that it's hitting it multiple times is going to possibly bring some lower action. If it breaks down, you should see it go easily to gap fill, which will be right here, and this will be major support. All right, so keep an eye on that. In addition, what I want to point out here, folks, where was the scalp on this trade? Where was the scalp on this trade of the 200? The answer would be this hit right here. The first hit of the 200 is always the best probability scalp. Sure enough, look at that. Touches it, and look at the size of the bounce afterwards. Look at the second one, smaller bounce, and the third one, smaller bounce. It's like a ball bouncing on the ground. First time you throw a ball down on the ground is going to be the biggest bounce. If you let it keep going, it's going to get smaller, smaller, smaller until it finally comes to rest. Same thing occurs in the market. Think of the market having floors and ceilings. Same principles. Okay? So again, ExxonMobil fractionally higher. Chevron, take a look at CVX, even doing the same type of thing, hovering right on the 200. Notice the first hit of the 200 right here. That was your best bounce. Then you got a little bit of another bounce, and then smaller and smaller, just like a bouncing ball coming down. All right, what next? Let's take a look here at Apple Computer. Apple Computer had a nice pop earlier, and I gave the call out, folks, to the chat room. I gave it to them. In fact, I gave it to the Research Center members. If you were a Research Center member, you would get included everything that's listed under Research Center for the $49.99 a month, by the way. And what I talked about last night and the previous couple nights to them and Apple, about Apple in the intraday stock chat today, was clear and simply the level right here. Take a look at this upper level right here, all right? In addition, you have a gap area right here as well. They're right next to each other. Notice price coming right in between those two and then selling off. Why is this important? Well, if you zoom in a little bit, let me zoom in a little bit for you guys. This is the day of earnings, and this is something I've highlighted to my Research Center members for quite some time. This was earnings right here on July 21st. It was reported. Actually, it was the night before, but the stock traded on the 21st, gapping up and then selling off. This created a box, and we talked about how if you broke below the box, you'd see continuation selling to first target, which was going to be right here at this pivot, and sure enough, look at where it went. Right to that pivot, and then if you moved up off of that and recaptured this line, this would be your next shorting opportunity right up here. Beautiful job, guys. Again, beautiful pullback. You're now about $2.25 off the highs of the day. If you shorted that, you're in the money nicely. You should have a break-even stop on that play. And again, congrats to those of you that did that play. That was an easy, no-brainer play, as I called it out in the Research Center Nightly video, as well as in the chat room today, that would be a great area to short. Okay, so continuing to watch this market. Market continues to hold pretty steady here as of now. I'll keep you guys posted on everything that is going on. But right now, market's continuing to hover. Let's go back to the SPY and just touch base. You can see you're really not getting much movement here. You're still holding steady. And again, that's what we're seeing for now, and we'll continue to update you. New analysis, new trades, everything that we need and what we will need to trade this market and swing trade this market and make money in this market will be available in that Research Center over the next couple days. Heading into next week, volume should pick up next week. Volume still very light today, but again, it should pick up as we get further and further past these holidays into the September time frame. Take care, folks. Have a wonderful afternoon and evening, and I'll talk to you all tomorrow or tonight in the Research Center.